With chaos at the New York Stock Exchange.
Get back in there at once and sell! Sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across this great country. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, February 16th, 2024. I just want to thank everybody that reached out and checked in on me this past week when I was under the weather. Appreciate that. I'm feeling much better now. A little bit of a down week for the markets. Well, most of the indices anyway. And it goes right back to what we've been talking about coming into 2024. One of the things that I thought would be one of the leading causes of volatility would be a concern about inflation and a concern that the Fed would not be dropping rates as the market seemed to anticipate. And so far, that seems to be playing out. I mean, markets are hanging in there for the year, but what's been causing the volatility has been inflation and interest rate concerns. So we had two inflation numbers this week. On Tuesday, we had the CPI number, Consumer Price Index, and it was hotter than expected, especially the month over month. And the market just really hated that. And it got beat down badly on Tuesday when that number was released. Markets across the board were down and down big. For any folks who've had new money come in over the last 3 weeks, we've just been sitting on it and just kind of waiting for a little bit better opportunity to jump in and buy. And we went ahead and allocated all those dollars on Tuesday because the market was just getting beaten down severely. And then it rebounded very nicely Wednesday, Thursday. Here on Friday, we got another number. We got the Producer Price Index. This is a wholesale inflation number. Again, the year over year is okay, but the month over month was much hotter than expected. Again, the market did not respond well to it. All the indices were down for the day. So for the week, the Dow Jones was down 0.1%, the S&P 500 down just under 0.5%, the NASDAQ composite down 1.3%. And interestingly enough, the Russell Small Cap Index was up 1.1% on the week. Now, it was up 1.1% on the week, but on the down days, it was down more than the other three. It's a little bit more sensitive to the idea that rates aren't coming down, that inflation's staying sticky. But on the other hand, we're starting to see the market broaden out a little bit more on the good days. So for a while now, it's been technology pretty much leading the charge, doing all the heavy lifting. And other areas of the market just haven't been doing a whole heck of a lot. Well, this week, we really started seeing these other areas start to kick in a little bit. So financials were up 1.4% on the week. Energy was up 2.7% on the week. Materials were up 2.4%. Utilities were up 1.5%. I just mentioned small caps in general up 1.1% on the week. So we're starting to see other areas of the market start to participate. Listen, I have to tell you, I think the market resiliency has been rather stout. I mean, really. We've had some data that's been a little mixed. And of course, the inflation numbers, not what the market was looking for. And things really could have been a whole heck of a lot worse than they were. I was kind of hoping they would get a little bit worse than what they did. They just didn't quite materialize. The market resiliency seems to be really strong right now, and that's something to pay attention to. So we're working our way through earnings season. We've got a couple more weeks or so to go here with some more companies to report, but so far, so good, or at least not so bad. How about that? A lot of companies been beating under the average, not beating the average, but it's still okay. Earnings estimates moving forward have still been coming down, but not at the same clip that they have been in quarters past. We've talked about that. So everything seems to be holding up okay. There's still a nice mixed bag out there in opinions on this market. There's still a lot of people beating the drum of recession and fear over that. And I think that's good. That's healthy. We don't really seem to sense everyone being on the same side of the boat right now. And that's actually good for the markets as well. So where we stand is this. When the market has these ugly moments, we're going to step in and buy like we did on Tuesday. We do have some cash in the models. I would like to see a little bit bigger of a drawdown before I put that cash to work. I like to see a little bit heftier of a correction, see the S&P drop, at least a good 5% maybe, get it down maybe around that 4,800 level would be a nice place. That's where it really broke out from a few weeks ago. If we get something like that, then I want to put some more of this cash to work as well. So I've got my eyes on a few things, just waiting for the opportunities to come to us. No need to chase anything. But right now, everything's been holding up pretty well. So that's where things are at the moment. Again, inflation is the story. Interest rates are the story, but it's working out as anticipated. We thought it would cause volatility that would be short-lived. And so far, we've had that. We've had these nasty days like we had on Tuesday, and the market turned right around and rebounded Wednesday and Thursday. So we pulled back some today on the PPI number, but again, will that carry into next week? It really wasn't that bad of a day when you really take a look at things. So, I never did tell you the numbers. I told you Dow Jones through the small cap index. Let me tell you a couple other things. The volatility index did pop up a little bit this week, 10%, but still under 15. It's still at a very low level. Long-term bonds, they were down just a touch, down 1.1%. Again, concerned that rates are going to stay higher for longer. And then I told you about some of the sectors already. That's what I have for you. A little out of order, but still the same information. So, between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it's retire a little early, buy that second house, take that big trip, pay for college or wedding or whatever the case may be. Don't just think about it. Think big, think BIG, and I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.